E&J Capital. Today's video will be about illegal things to do in the stock market with you and your friends. If this video gets 100 likes, Drell will jump over this bridge inside the Providence River. Regardless if you have a small account, large account, if you just want to finesse the system and white collar crime is your passion, this is the video for you. Computers have been more and more involved with the stock market. It's been easier for everybody in the world to invest in the stock market. All you need is a computer, access to the internet, a brokerage account, and you could trade. You could invest. The people who keep an eye on your trading is the SEC, Securities and Exchange Commission. They make sure everything's regulated, everything is fair amongst its traders. They like to keep tabs on you. Bear raid. Bear raid is when a group of traders attack a penny stock or a micro cap stock, a stock with not many shares outstanding, low float, and it's easy to manipulate. The stock's easy to manipulate. It's easy to manipulate its price. So as a group of traders with somewhat large accounts attack a stock and they're all on the same page, they drive the price of the stock down, and then they buy the cover when it's a lot lower, and they make their profits. It's not that difficult to attack a low float stock if you have a little bit of money. So another one, when there's a group of traders on the same page, if they're all finessers and scammers, there's a lot of things that they're going to do. One side can go short, one side can go long, and they can pretty much buy and sell within each other. When a group of traders are trading against each other, one's buying, one's selling, and they're all trading, that makes it look like there's a lot of activity in the market. And when there's a lot of activity in a certain stock, it brings other people from outside that group to start buying and selling within that, which will bring volatility, which bring movement into the stock, which is manipulated.
Please go ahead, do it for the 100th time.
Wait for the car. All right, pump and dump. Pump and dump is pretty common in penny stocks.
Oh, can I pump you and dump you in this river?
People start out buying a stock that's nobody's talking about, nobody's looking at, and then they start pumping it up. They either have a group of people who follow their trades, or they have like a forum of a lot of people involved in that group, and they say, okay, this stock looks like it's ready to break out. They're already in it. They say, okay, let's buy it. Everybody starts to buy. The stock goes up. They get out. When they get out, the share drops, and they're already out, and it dumps, pump and dump.
You're supposed to push with Bistics.
I was just giving them alternatives. Shit! The Bistics is our pick of the week. Why? It's got a 3 million float, the competition's robust, and their technology's 2 years behind. Your stock's a dog.
Famous one that everybody should know is insider trading. Let's say you're working at a place, a publicly traded company, and you're out with Jimmy. Jimmy's from accounting. You guys are out drinking, and he's talking a little bit too much. And he says like, oh, our numbers are not looking good for next quarter. Our earnings are not going to look so good. Our revenue's down, sales are down, all that. You take that opportunity and say, okay, I'm going to just short this stock, because once people find out that this company's not doing well, stock's going to go down, and I'm going to profit. You're not supposed to do that. Look at Martha Stewart. Martha Stewart had, I think, 4,000 shares of Clone. It's a biopharmaceutical company. So she had a relationship with one of the executives, and the executive told her they weren't going to get approved for a drug. Their drug was called Erbitux. They weren't going to get an FDA approval. A lot of times with these biopharmaceutical companies, their whole existence relies on FDA approvals. If the FDA doesn't approve their drugs, their company drops. It was warned ahead of time that this drug wasn't going to be FDA approved, which will cause the stock to tank. So she got out a day before, got off before the sinking ship, sold her shares. That's against the rules. If you're with it, you're not supposed to trade on non-public information. You can only wait for it to go to the public for you to trade on that information. Next one is boiler rooms. There's kind of like a movie on this one too. Stockbrokers.
Is this stuff regulated, or you guys, what are you doing here?
Stockbrokers have clients. They tell their clients what to buy and what to sell. You know, they go for them for their professional advice. These brokers give bad advice on purpose. They may suggest penny stocks or failing companies just so they can get a commission or they may even work with these companies. The companies want them to promote their stock, which rises their company. In reality, they're not good companies to begin with, which is, you're frauding investors. Enron was one of the largest companies, but for years they lied about their accounting. They would, tweak some numbers around so their investors thought that they were doing better than they were. In reality, for years they weren't doing that well. They lied about their earnings, they lied about their financial statements, and over time they finally got caught up, and the whole thing collapsed because they were lying. Their accounting team were lying. Short and distort, like what they did with Bear Stearns. They would bring out negative news about a stock to try to tank it. Like Bear Stearns back in the day, and kind of like, I forgot the guy's name. He was a hedge fund manager. He is a hedge fund manager. And he attacked Herbalife a lot. But he was telling the truth. But when you short and distort, meaning you're shorting, you want the stock to go down, and you distort it like you distort some of the news to make it look like there's a lot of bad news in the company, when that might not be the case. When you're dealing with financial statements, you don't want to overstate assets, overstate revenue. So these financial statements, one of the first lines you see on these statements is the risk of the company. You don't want to understate the risk in your company. If you have a larger company or not, even if I'm talking to somebody who just works there, you don't want to be involved in anything lying about the company. One of the largest one, the last one, is you could run a Ponzi scheme like Bernie Madoff. He was a stockbroker, he was a money manager, he was a chairman, and what he did, he owned a hedge fund, and he ran a Ponzi scheme where he would have investors, the investors would pay in, right? And he would kind of invest, but the most of his money came from just having a lot more investors investing with his company. And when previous investors wants to withdraw money, he just pays them with the money from the new investors. Don't manipulate stock prices. Don't pump and dump. Don't insider trade. If you know something about your company, don't trade on non-public information. Don't run a Ponzi scheme. E&J Capital, like and subscribe.